In this video, I want to talk a little bit about Roku. And the reason is because I've got a double strategy going on here. One of my favorite things to do when I trade the option strategies like an Iron Condor and an Iron Butterfly is, first of all, you'll notice that I put on this Iron Condor last week. And you can tell it's an Iron Condor because the two options that I sold are way far apart, and then my insurance policies are out here even further apart. Roku has a very deep set of options chains. It's very deep. It goes quite deep into the money both directions. And so this is a great market to trade condors on. And if you come back over here and take a look at what we've got going on Roku, it's a little bit sophisticated, but I'm going to try and explain it to you, and it's not that hard after you take a closer look. So I put on an Iron Condor about last week, and it's really super wide. And again, because those option chains are so wide, we can do that and make it worth doing, make it worthwhile. And you can see in here that my last week's options have a cost basis in here of about $245. And so I sold one that's worth $256, sold another one worth $152, and then I bought one for $125 and bought one for $38. And so that's kind of how that particular Iron Condor has been working out. I knew that we had a earnings coming up, and so that was really wide in anticipation of that earnings, and you can see that it came through. And the nice thing about this particular situation is the earnings came one day before the expiration of the options. Now, I did this as a teenager. It was like I think 18 days before expiration, and so I sold it at 18 days out and waited for the decay through the time value. And then as we got in here and the market moved hard on the bad news, apparently, for Roku, the market dropped really hard. Now, this is one of the things I've been doing lately that I've really been having success with. And as soon as this market drops, I'll come in here, and after the market is known, the implied volatility goes way down, and the market usually drifts pretty sideways. Sometimes it'll start to rebound and rally back up a little bit and move up into this gap area on some of these markets. But what I like to do, as soon as this market is down, you can see the implied volatility is very high because the market just barely dropped after the earnings report. And so what I do is I'd come in here and drop an Iron Butterfly on here, and I sell the two right at the money with wide wings out here and look for this market. It's only got one day until expiration, actually the rest of today and tomorrow. It's just got to hit that purple line before it goes too far up towards these green lines. So that's kind of the game I'm playing right here, and I've had good luck doing this. And you can see I'm up $263 on this particular strategy, which is the Iron Condor making the money right now, of course, up 98%, whereas I just barely put on the Iron Butterfly. And so we're waiting for that one. But you can see the Iron Butterfly has a cost basis of $511. I sold the at-the-money calls and puts, picked up $256 and $288, and I'll pick that money up as this market drifts into expiration. So that's the name of the game. Wait for the market to already make its move, and then while the volatility is still high, go ahead, sell one of those butterflies and see if you can pick up a little extra premium moving into expiration. And that's just a quick strategy I've done here on Roku.